In this video, we'll be taking a look at a few chart analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. If you're interested in learning to trade first like a professional, check out our complete Forex training course on Udemy. I have the link attached in the description below as well. So as usual, we're starting with the gold chart on a 4 hours time frame, which is what you can see on my screen right now. And last we talked about the possibility of a short reversal followed by a bullish move to the upside with a measured price movement of approximately 400 pips, and that's exactly what we got this week. So I hope we're able to capitalize on the opportunity. Right now we seem to be trading above this symmetrical triangle with a good bullish breakout on the 4 hours time frame. So all I can say right now is another opportunity, or looking for another opportunity to go long, because a bullish breakout from the symmetrical triangle seems to points towards more bullish momentum in my opinion. But the caveat here is that we've bounced off of this area of value, so this is an area of resistance which has kept price from going higher, and right now I think we're going to see some sort of consolidation over here followed by a bullish breakout to the upside. So the consolidation may not last as long as I've drawn it on the chart, because if you follow this drawing on my chart right now, it's points towards a breakout around 23rd of January, excuse me. So a breakout could happen tomorrow, Monday, could happen next tomorrow, it could take a while, could take a week, a month, however the case may be. But the point is waiting for a good breakout above this area of value before we go long. So if this happens, your breakout is going to be above the consolidation that leads to the breakout, which is what we're going to have over here. Stop loss is going to be below the consolidation underneath these lows. First take profit target obviously is going to be around these highs, while you trade your positions or the rest of your positions as we go higher, since that would send price into price discovery, right? So this looks like a self-explanatory chart. Just as I've explained last week, everything has worked perfectly, right? As I've explained last week, and now all we need to do is look for an opportunity to get in for those who aren't in already. So if you're already in, just hold on to your positions, adjust your stop losses to break even to safeguard your trades, and wait to see if we take out this area of resistance. So when we take out this area of resistance, or if we do, then you want to go long with your entry above the breakout, stop loss on any consolidation. This is a breakout. First target at these highs while you trade the rest of positions as you go higher. That's it briefly for gold. I don't think there's any much to talk about, and I'm not looking to go short because I see no reason why I want to go short in this chart, right? Some traders would probably go short around this area of resistance with the hope of a bounce to the downside, something like this, then go up. It's totally possible that this could reverse coming to touch this trend line, but that's not a risk I'm willing to take, since we are currently experiencing sort of bullish momentum from the bulls rather than bearish momentum from the bears, right? So that's briefly for gold. If you have other thoughts on how you're going to trade gold this week, please leave those thoughts in the comment section below. Share with me your opinions and your thoughts so I can get to learn from you as well. Moving on, we're talking about Nasdaq. So there's a US 100 Nasdaq. Last week I drew the support level over here, and I clearly stated that you should be careful about going short, because there's a good chance we get a price fake out, right? And that's exactly what we got over here, a good fake out followed by a bounce to the upside. So that's why I told you I always wait for consolidations before my breakout. This gives me some sort of validation before I enter my trade. Or after the breakout, I wait for consolidations, right? Followed by another breakout from that consolidations before I go short. This gives me better sort of confirmation. I'm not saying it works all the time, but it's going to help you avoid most of these fake outs if you just patient enough to wait for those consolidations. I didn't take this trade, so nothing for me here. So I'm just saying this because of other traders who might have done so. So right now we seem to have broken out from this falling wedge. So this seems like a falling wedge, which also relates or equates to a bullish flag, right? It's a bullish flag because you can see the flag pull, which can be seen as this movement to the upside, and the flag itself, which is this consolidation, now followed by a bullish move, right? So this is a classic bullish continuation pattern, but you know what the market does. So the market can go any direction it pleases, but based on the pattern we can see on the chart, we can clearly see that there's a good chance we head higher, right? So if you're trading with a very tight risk management, current price levels are not a very bad level to get in on the buy positions, right? Because if you go long over here when the market opens, for example, your stop loss obviously is going to be underneath these lows. Take that major price movement, this should be approximately 200 pips. So 200 pips stop loss. Sorry, this will be 400 pips. Yeah. So 400 pips stop loss seems a bit wide for Nasdaq, right? Because it's a 2 hours time frame, and potential take profit target is going to be around these highs. But the thing is, before we get to these highs, we have an area of value here which could prevent price from going higher, another one which could prevent price from going higher. So it's not going to be a smooth move to the upside aiming for these highs, except we just see something drastic happen in the market, like Donald Trump being inaugurated in a few days. So that could create some bullish momentum in the market, which could eventually send price. I really believe there's a 70 to 80% chance that it sends price higher, which will give you approximately 700 pips move to the upside for Nasdaq, right? So 7 to 4 seems like a good deal to me for those who are going to go into a trade at these current price levels, right? So 7 to 4 seems like a good trade to me. So almost a 1:2, right? So alternatively, if you do not want to jump in, you could wait for more consolidations, right? Wait for more consolidations and then bullish breakout. So there's no guarantee this happens, but if this happens, then this gives you a tighter risk to reward ratio, because then the entry is going to be at the breakout. Your stop loss can now be adjusted underneath the consolidation at least to that breakout, so bringing your stop loss to eventually around approximately 200 pips. So 200 pips to 700 pips potential take profit, or 600 pips potential take profit. That's a trade of 1 to 3. So take profit target is 3 times higher than your stop loss target, which will be a decent opportunity to go long for Nasdaq, in my opinion. So just like gold, I don't see any reason why I'm going to be bearish on this. And I just stated that Trump is going to be inaugurated in a few days, so I think that's going to create some sort of bullish momentum from the fundamental point of view, right? So that's something to bet on. So you don't want to be on the opposite side of that trade when Trump becomes the official president of the United States, right? I think it's going to create some sort of bullish, momentum in the market. So that's it briefly for Nasdaq. So the bullish fundamentals from Trump being inaugurated also goes as far as trading major currency pairs like GBUSD, EURUSD, USD-CAD, and all that. So you want to be on the bullish side of the US dollar, not the opposite side, right? Because I think Trump in office is going to be bullish for the USD. So that's just a side note for those who care. So moving on, we're talking about crude oil. So crude oil, real quick, we talked about the possibility of breaking out from this area of value, and we did that last week. Yeah, it seems to be trading above this area of value right now, which is this sloping trend line that created this descending triangle, right? You can see the highs, 1, 2, 3. So 3 lower highs with a flat bottom, let's say our support level. Now good bullish breakout above this area of value. So I do think there's a good chance we go higher. Another reason is because Trump in office, good for the US dollar. Crude oil prices may seem bullish at first, but eventually they're going to calm down, because it's been talking about how it's going to reduce the price of energy, which equates to reducing the price of crude oil as well. So short term, we could see some bullish move to the upside, then a tick to the downside, a drop to the downside. But for us traders, we want to follow the pattern. So what I'm watching out for is a consolidation like this, like I always do, followed by a bullish breakout. So if this happens, then my entry is going to be at the breakout from this pattern. So which could be like a symmetrical triangle with a bullish breakout, bullish flag, bullish rectangle, however the pattern may seem like. But as far as we do get a bullish breakout after that pattern, then I'm going to pick my entry. Stop loss is going to be underneath the consolidation list of the breakout. Take profit target, obviously, first one is going to be around these highs, second one around these highs, then third one around this area of value, which is our solid area of resistance dating all the way back to August of 2022. So this has been holding for almost 2 years now, or more than 2 years now. Yeah, more than 2 years now. So I think this will be a very good area of value to take out most of your positions, because there's a good chance we get heavily rejected from this area of value, and then see price going downwards. Otherwise, we may just be rejected a little, consolidate, and then continue bullish move to the upside. Who knows? But for now, following the short-term price action, which will be waiting for a consolidation over here, followed by a bullish breakout to go long in continuation of the already bullish move we've seen within the past few weeks. This is how I'm going to trade crude oil. This is a daily time frame, I know, but all this I just talked about will be watched at on a 1 hour time frame, right? So I'm going to navigate to the 1 hour time frame briefly so you can clearly see what I'm talking about. So I have no bearish sentiment for crude oil right now because the chart screams bulls. I have no reason or no, no reason to go short. So that's why I wouldn't be reviewing any bearish case scenario, because me talking about a bearish case scenario right now would just be me, trying to create something out of thin air that's actually not there. Okay, so if you have a bearish bias, please leave those thoughts in the comment section down below, and I will do it to check them out, see if I can learn a thing or two from you. So this is a 2 hours time frame, and as you can see, we are kind of retesting the trend line. And to redraw my pattern, my expected pattern will be something like this, consolidation like this, right, followed by a bullish breakout to the upside. So if you take this highs, so this will give you some sort of a bullish flag, right? However the pattern comes, what has been formed, as far as we do get a bullish breakout, that will be my confirmation to go long. Entry above the breakout, at least above the consolidation leads to the breakout. Stop loss underneath the consolidation leads to the breakout. First take profit target around these highs, as I've explained earlier. Second one over here, third one, the major area of resistance. So this is how I'm going to trade crude oil this week. If you have thoughts, please leave them in the comment section down below. And I apologize for talking really fast. I just want to get this video over with so we can move on to other things for the day. Lastly, we'll be talking about USD-CAD. I've been talking about this for a while, and since we just had a good breakout from this consolidation over here, which is our confirmation we're waiting for, so I'm going to go down to the lower time frame to see what's happening down there. So let's try the 2 hours time frame, for example. So 2 hours time frame, zooming in, just give me a minute. So zooming in on the 2 hours time frame, we can clearly see a clean breakout, and I think this equates to the US dollar being bullish, right? So clean breakouts. I know it doesn't seem really nice to get on a trade right now because there's no consolidation, as I always wait for, right? But if you take a measured price movement, if it's something you can live with all the way down to these lows, this can be a good area to set your stop loss. And this will be approximately 100 pips, which isn't too bad in my opinion. 100 pips. I know that may be like a lot for so many traders out there, but for me, it's not a lot really. And potential take profit to be around 200 pips. I know it's a little bit above the area of resistance, but approximately 200 pips. So this still gives you a trade ratio of 1 to 2. So your take profit is 2x higher than your stop loss, which is a decent trade opportunity in my opinion. Other than jumping into a trade when the market opens, you could wait for a pullback, which could sink back into this area of value, consolidate a little before we go up. So this could be another opportunity for you to go in. So if you get in here after the breakout, stop loss could be underneath consolidation. It's a breakout, then it gives you a tighter risk to reward ratio, with your stop loss being approximately 50 pips, take profit target being approximately 200 pips, so 1 to 4 ratio, right? So this is what most traders need or want. So if I were you, if you don't have the financial capacity to take on a trade with 100 pips stop loss, you could wait for a pattern like this to be formed before getting on a long position. Like I said earlier in the crude oil charts about bearish trade opportunities, I don't see any bearish setup here. I wouldn't just create something out of thin air for you to start wasting your time on, right? So that's why I'm sticking with my bullish thesis, and I'm gonna leave it at that, right? So if you are bearish on USD-CAD right now with this chart I'm looking at, please, I'm curious to know what your reasons are. Okay, maybe you think this is probably going to be a fake out, which is possible, but until it happens, there's no way to tell for sure, so I won't be going short. So that's the reason why I'm being bullish on USD-CAD as well. Mind you, I don't trade currency pairs. I'm only doing this for those who do. And if you think this is a bearish setup, please leave your thoughts in the comment section down below. Other than that, I think that's all for this week. If you have questions, you have thoughts, please share them in the comment section down below. I'll do it to respond. That's it from me guys this week. See you next week.